All right, let's get right into this one because it's a truly fascinating case study of how the stock market can sometimes make absolutely no sense on the surface. We're going to look at a company that, by all accounts, did everything right and still got totally crushed for it. So, get this. Here's the central mystery. Fortinet, a huge player in cybersecurity, puts out a really strong earnings report. Logically, the stock should go up, right? Well, nope. It completely cratered. And we're not talking a little dip, we're talking a massive, over 20% plunge. So the big question is, what on earth did the market see that so many others missed? And this right here, this visualizes the whole paradox perfectly. On one side, you've got this really healthy 14% revenue growth. That's a great number. But on the other side, you see the market's reaction, a brutal 22% smackdown on the stock price. These two numbers just don't feel like they belong in the same story. So to figure out why they do, we've got to dig a little deeper. And that's because this is the real secret of the stock market. It's not a historian, it's a fortune teller. It cares so much less about what you just did, and so much more about the story you're telling about what you're going to do. And for Fortinet, one tiny clue, hidden in plain sight, completely flipped the script on their future story. So, what was this hidden clue? Well, it wasn't some crazy, complicated financial ratio buried deep in a report. It was a pretty simple idea, actually. They called it the refresh cycle, and this right here was the key that unlocked the whole thing. So what in the world is a hardware refresh cycle? Well, think of it like a giant wave of business. For a company like Fortinet that sells physical boxes, firewalls, there are these periods where a ton of their customers all decide to upgrade their old gear at roughly the same time. This creates this awesome but temporary surge in sales. And investors, they were really counting on riding that wave for a good long while. And then the bombshell dropped. Right there on the earnings call, the company's management let it slip that this huge growth wave everyone was so excited about was already 40 to 50% done. Think about that. The party was basically half over, and investors felt like they had just walked in the door. You see, in that single moment, the entire math changed for Wall Street. The story wasn't about a huge wave of growth that was just getting started. Suddenly, the story was about a wave that had already crested and was about to come crashing down. That bright future that was priced into the stock suddenly looked a whole lot dimmer. So what happens when a company's story about the future just collapses like that? You get a chain reaction. It's like a line of dominoes. That one little piece of information triggered this incredibly fast and painful cascade of bad news. And this timeline just shows you how fast it all went down. August 6th, the good earnings report comes out. Less than a day later, the stock is in absolute freefall. And right on the heels of that, the pros, the Wall Street analysts, start tripping over themselves to downgrade the stock, basically confirming the market's worst fears. And this is exactly what that confirmation looks like. When a big firm like KeyBank says they see a challenging setup, that's basically Wall Street code for, the amazing growth story we bought into yesterday? Yeah, that's not the story anymore. This just pours gasoline on the fire and signals to all the big money managers that it might be time to bail. And if that wasn't enough, it got even worse. The problem jumped from being a business risk to a legal one. A lawsuit gets filed saying, hey, you guys weren't exactly upfront about how much of this big upgrade cycle was already behind you. And that adds a whole new, scary layer of risk and uncertainty to the situation. Okay, let's just zoom out for a minute here, because this one company's bad couple of days actually teaches us a much bigger lesson about two very, very different ways that tech companies make money. This breaks it down perfectly. On one side, you have the hardware model. It's what we call lumpy. You get these big, exciting sales waves like Fortinet's refresh cycle. But they don't last forever, and you're always wondering what's next. It's a high-risk game. But then, on the other side, you've got the subscription model. Think Netflix, think Spotify. That revenue is recurring, it's predictable, and it just steadily builds over time. It is so much lower risk, and it is exactly what investors absolutely love to see. Fortinet's stumble really highlighted just how much it was leaning on that riskier path. So what's the takeaway from all of this? How can you actually use what happened to Fortinet to be a smarter investor or just a smarter observer of any company? Let's build a quick little playbook. Okay, first, the good stuff, the green flags. You want to see that beautiful, strong, recurring revenue. And what's funny is, even Fortinet had a piece of this. Their cloud security subscription service, or SASE, actually grew really well.
it just wasn't enough to calm the market's fears about the hardware side. You also want to see management being really upfront and a business that isn't just a one-trick pony. And now, the red flags, pulled straight from this story. If a company's whole growth plan hinges on one of these finite cycles, you've got to be careful. If you ever hear management say something like, the best part is halfway done, that is a massive warning sign. And of course, if you see the company's story suddenly change and all the analysts are running for the exits, you know the magic is gone.
Which brings us right back to the central question of this whole explainer. What really matters more? The numbers a company just posted or the story it's telling about tomorrow? I think the Fortinet paradox gives us a crystal clear answer. Having a great report card for the last 3 months is nice, but the market is always betting on the story of the future. The second that story breaks, nothing else seems to matter.